Hi, my name is Ryan Iverson, and this is the Weekly Insight, and this is what I'm watching this week. Let's talk about one of the simplest yet most misunderstood cryptocurrencies, the stablecoin. What makes stablecoins unique is that they're pegged to stable assets, like the US dollar. The price doesn't change. One coin equals $1. In just 2 years, stablecoin volume has surged 100 million to 3 billion. That's a 30-fold increase. So what does that mean for you? Stablecoins offer global reach. Anyone with an internet access can hold a dollar-backed asset without needing a US bank account. Unlike bank wires, stablecoins settle in seconds, 24/7. No weekends, no holidays. They're programmable money, meaning developers can build apps that move dollars as easily as data. And despite being pegged at $1, stablecoins have processed trillions in volume. They've become the backbone of DeFi and cross-border payments. Now they're central to the US government's plan to regulate digital money. So the big question is, what's next for stablecoins? Let's break down what's driving oil markets and why this moment matters for the global economy. Crude oil has been up 20% this month and is currently down 12% in the last 2 days. Heading for its biggest monthly jump since 2020. The catalyst? Rising tensions in the Middle East, especially between Israel and Iran. Why is this so critical? About 20% of the world's oil and gas moves through the Strait of Hormuz, the most important oil transit choke point on the planet. That's nearly 20 million barrels a day, or close to 600 billion a year in trade. A disruption would ripple through global markets, spiking oil prices, increasing shipping costs, and fueling inflation. Major economies like China, India, and Japan would feel it first, but higher manufacturing and fuel costs would hit consumers everywhere. There are backup pipelines, but they can only handle about 15% of this volume, not enough to prevent supply shocks. Bottom line, oil markets are on edge, and the stakes for the global economy are high. Silver's story isn't just about shine. It's about strength, strategy, and what's driving markets right now. If gold is king, silver is queen, and has become quite topical recently. Tight supply and strong industrial demand have driven silver prices up 23% year over year. Here's what's behind that surge. Demand is projected to hold near 1.2 billion ounces, but 2025 mining output is forecasted at just 835 million ounces, nearly 8% lower than 2016 levels. Even with recycling supply expected to rise 24% to 195 million ounces, it won't close the gap. That shortfall is set to continue, keeping prices elevated. And silver's role goes far beyond investment. Electrification, AI infrastructure, and high-performance computing are making silver essential to the industrial economy. Add in the Fed's signal for more rate cuts, lower rates boost silver's appeal as a non-yielding asset. A soft dollar and persistent inflation fears are reinforcing silver's dual role, industrial metal and monetary hedge. That's the setup, and why silver remains one of the smartest assets to watch right now.